Hello and welcome to the Killik & Co podcast. Summer is over and as expected we have seen a bit of a pickup in the amount of news flow. Nevertheless, the market has not moved that much this week to date. If you have a look at this chart here, this shows the FTSE 100 over the last year. The record high was back in the summer when the FTSE 100 went over 7,500 for the first time. And as you can see, the market is not currently much below that level, which is quite surprising given the current situation in North Korea. If we go back to August the 10th, you can see a bit of a decline in the market. That was the day on which North Korea announced that they would be firing missiles over Japan and into the sea around Guam. So that did cause some concern, did cause a small decline in the market, but not a decline to the level at which we might have expected. Since then, there have been a number of sanctions imposed on North Korea. The UN has banned the purchase of a number of North Korean exports, including coal, iron, lead and seafood. These four products do make up about a third of North Koreans' exports by value. So by cutting these out, we think the country will lose about $1 billion per year in import revenue. So that should be quite damaging to the country. There has also been some discussion about banning oil exports into North Korea. North Korea doesn't really have any oil production capacity of its own, and most of its oil comes from China. China is quite reluctant to completely cut off the oil supply because that really could cause quite a large amount of tension. So we would be surprised to see that happen, but we will be monitoring the situation closely. It's also been quite a big week for monetary policy. This week we have had a surprise interest rate rise from the Central Bank of Canada. They've raised interest rates to 1%, and that is their second interest rate rise this year. Earlier this year they raised rates, and that was their first rise since 2010. This week's rise did take the markets by surprise, and the Canadian dollar did rise about 2% against the US dollar. Then on Thursday afternoon, we had an announcement from the European Central Bank saying they would keep interest rates on hold. That didn't really come as a surprise, but Mario Draghi did a speech after that, and he did say that the committee had been talking about potentially starting to scale back some of the bank's quantitative easing. So that did cause a bit of movement in the bond markets. If the European Central Bank does start to scale back its quantitative easing program, that means there will be less demand for bonds, perhaps a bit of decline in bond prices, and a corresponding rise in bond yields. That would be good for the euro, and therefore, after Mario Draghi's comments today, we have seen a small rise in the euro. Now, the euro at the moment is quite a concern for Draghi. It has strengthened a lot this year, and that is very bad for European exporters. So I think he would be reluctant to scale back quantitative easing too quickly, because that could be very damaging to European exporters indeed. He will have to proceed with caution. And last of all, we have had some interesting data from the BPI, which is the trade association for the UK music industry. They've said that it has been a record year for UK music exports, and the reason for that is that streaming companies such as Spotify have enabled overseas consumers to start downloading a lot of British songs and artists very easily. So in 2016, we had an 11% rise in the value of British music exports, and the total value hit £365 million. That value is expected to increase over the coming years. It is quite positive to see this turnaround in the music industry. It has been quite a tough couple of decades. Obviously, there's been a huge decline in the value of CDs that have been sold. There have been problems with music piracy, so it is quite encouraging to see that the industry has made a success out of streaming. Moving on to the week ahead, we have got one Killik company reporting, and that is Ashtead, the equipment rental company. That's it from us. Have a great weekend, and we'll see you next Friday.